Hey, good morning, everybody. Thank you for continuing to join me each and every day. I'm here to improve what you do on your daily trading. So let's get into yesterday. What did I first thing I shared yesterday was on our Discord. So I'll share it again. Okay. You may be worried, but the equity market is not. So going into yesterday, everybody thought the market was going to tank. However, the straddle or the IVs of the straddle for yesterday being Thursday and Friday are very low historically for thinking that the markets are going to tank or have an extremely volatile day in the markets or a volatile week in the markets. Why would we have a volatile week? Because the US was downgraded. All right, but the markets actually showed some resilience yesterday. And what happened? Warren Buffett came out and he said he bought $10 billion worth of US treasuries. And this coming up Monday, he's going to do the same thing, buy $10 billion worth of treasuries. He said the only thing in question was whether he's going to buy 3-month or 6-month treasuries. If you look at the 2-month curve versus the 10-year curve, you're also looking at 5% versus 4.19%, which is pretty strong, which is why liquidity, again, could be seen as leaving the market. Now, interesting, Apple and Amazon both had earnings yesterday. Apple's expected move, and this is kind of how I might base things on the market today. Apple's expected move was 4.6%. So if they beat an astounded earnings, you were looking for a move to $204. If they missed and the stock went down 4.6%, you were looking for $185. Okay. The fact that Apple is only down 2%, and again, it's been selling off, makes me think that, you know what, there might be more downside on Apple. And if Apple goes down a little further, it'll probably drag the whole market. Another interesting fact or stock that I'm going to add to my watch list, and I trade off this app using Robinhood, and I hate this stock, Robinhood, but they finally had positive earnings that they just reported. Now, Kathy from ARK went in and bought up 5.5 million shares of Robinhood. Now, if you think she's done buying Robinhood, she is probably not. Let's remember how many shares. I think she had 8 million shares of Tesla. Tesla was a $200 stock. She's only got 5.5 million shares of Robinhood. Robinhood's a $13 stock, a $12 stock, wherever it is this morning. It probably has more room to run, and she probably needs another 12 to 15 million shares before she's fully invested into Robinhood stock. Now, she won't buy them all today, but she'll spread it out over the course of a week. So all the dips will be bought up. So that's something that I'm going to be watching. Robinhood move to one of the top of my list. Okay, a weak employment report in the U.S. tomorrow could trigger reactions similar to those of 2011. Now, that's what Michael Burry is saying from, the guy from The Big Short, Michael Burry. With that said, jobs reports probably came out at 8:30. Let's just see how the market reacted to the jobs report because I don't have the jobs report live. The U.S. dollar dropped significantly. Gold spiked up. Thank goodness, because I have some gold options. Again, what did I do yesterday with my gold options? Remember, I mentioned that I was in a bad position yesterday. I was going to look to roll those out. So let me explain what rolling out options means. It means my options were expiring this Friday, meaning today. I wanted to roll them out, give myself an extra week of time. So what did I wait to do? I wait till gold spiked, and it spiked to what? $179.94. I exited my option positions. Then I said, okay, I'm going to roll them out. It doesn't mean I'm buying next week's calls at the same time. I'm going to let it drop down, which it did. And then I bought next week's calls, which I think I'm up like 5-6%, even though gold closed pretty poorly. With that said, we will talk about the SPY. Just looking at different earnings that report. DraftKings up 12%. I'm holding 2 Amazon calls. I bought them on Wednesday. I bought them thinking that Amazon would run into earnings. Here, I'll give you an example of a trade. Let me just pull this up, and let's get to Discord. Because all trades are not lotto trades. So let's just go down here. Bum, bum, bum. All right, so I'm in Amazon. Here we go. So I bought these on Wednesday. Yesterday's return, I lost 7%. I lost 36% on Wednesday because I was damn early. I thought we would run into earnings. So I was expecting to get maybe $4 out of these, and I would sell and take, a minor profit, a minor scalp. I got stuck holding this one and this one. But as Amazon's at $141 pre-market, this should be worth about $950 when the market opens. Closed at $3, so it's going to be up 250%, which will take this negative 30% up to 214% positive. This one will be worth $7. So $7 from 2.25, you're talking about 222%. I'm down 43%. So I'm looking for a positive gain of 180% on this trade. Now, again, I wasn't making an earnings play. I was looking for Amazon to run into earnings. That was my strategy. It did not. I got stuck holding. All right, let's talk about a Starbucks play. These are me rolling out my gold options. So instead of the 181s that expired this week, I'm now in 181s that expire next week. Again, I expect gold to have a nice little bounce to 183. Starbucks, I mentioned this trade. I bought some at 35. Originally, I sold, I think, at 51. Right. So going into a Starbucks, I scalped some of these. I bought these at $36. They were $37. I put my exit strategy was going to be $51. What happened? Bum, 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 bum. And I took $51. Where did Starbucks go? A little higher. Now I will re-enter at $35. My phone is off. So you can put in your bid. If it comes back down, which it did, right? I still said I'm looking to enter at 35. It was 41 on its way down. I knew that I wanted to enter at 35. Why? Because when I look at the chart, this was $34. This is 35. This is 36. It touched 34 again here. I know that was proper entry, and I know it likes to spike. 1, 2, 3. Let's remember the other day when the market was throwing up on it, Starbucks went to 104. So again, got in at $35. Was buying a couple extra. Those were my bids. I always like to show you guys. Open interest was pretty strong. Again, I got out. Second time, I'm in at 35. I'm asking 49, not 52, because I thought the market might struggle at the end of the day, and I didn't want to carry these positions over. Again, I got out at 49, so that was a second successful Starbucks trade. So again, when you have certain trades, you want to look and have a complete strategy. You want to know if you're going to carry them over or not. Let's just see what kind of questions we have today. I seriously need help to stop missing out on plays, especially when I know they're about to happen. You got it. Medical bills, no insurance. Okay, so what's the good play for today? I don't know. Let's go over some stocks and find the good play today. Now, I don't get all the best plays. The other day when I mentioned Starbucks pre-market, okay, Starbucks was $100. The $105 calls at market open were going for $8 each. When Starbucks went up to $104 that same morning, we're talking about like 11 a.m., strong demand, those options were $90. So from $8 to $90, you're talking about a 10x return. So just because I talk about lottery plays doesn't mean that they have to take place on Friday. They can take place on Thursday, on Friday. So the question was just asked, what do I like going forward? What's the play for next week? Again, I'm looking at gold. When I look at gold, all right, I see that it's been selling off. There's finally an inflow day yesterday. I was early because I called the inflow day a day before yesterday when it was just bottoming out. Now, when you look at gold, it doesn't change. It doesn't just curl up in one day and flick back like the market did. The market could sell off. It's like a slower process. So when I mentioned yesterday, I wish I had gold out till next week. Gold is a play that I'm interested in to next week. I just mentioned DraftKings. Now, again, I hate the stock, but if Kathy bought 5.5 million shares of DraftKings and they finally reported their first quarter of positive earnings, and not to mention there was one statistic when it came to the earnings that just outshined everything else. It had to do with ROI, return on investment. So again, I happen to think DraftKings has a little more in it. Sorry, that was DraftKings. Sorry, I'm talking about Robinhood. They're both, sorry, DraftKings did a really good earnings. Robinhood, the earnings were decent. Now they do that 24-hour trading. But again, the Robinhood trade would be based on Kathy. The DraftKings trade, I would need to see support because DraftKings was up 13%. I want to see if they're selling and taking profit because, you know, a lot of people, well, let's just see where the average entry is in DraftKings. Most people are profitable, so they probably will not take profit off these earnings. So I would expect any dips to be bought up. Let's mention Palantir, okay? Palantir has a bunch of options. And now I'd have to look at next week's expiration. But I know today's expiration, they really want to push Palantir above 20. So I saw some funny business after the market closed yesterday. So again, I might be looking at a Palantir dip today. It was up 2.5%. Here's your Palantir, okay? Again, these $20 options have been open for a while. You can see the demand. We had the outflow day on Thursday, obviously, because the whole market tanked on Thursday. There was inflow yesterday at light volume because people are unsure about this market. But once Palantir gets a little flow into it, I think it's going back above $20, $21, $22. You're talking about a 3-point move. Could be about, what, 16%? Probably in the next week, if I'm correct about this. Again, if the market collapses, I change my mind. I don't want to be in Palantir. I don't want to be in calls of anything. However, I don't think the market's going to collapse. I'm looking at the IVs for next week's SPX, which are the S&P 500 options, and the IVs aren't shooting up, which tells me volatility will calm down. So let's remember when I first started doing these YouTube live streams after the market, we used to talk about the UVXY. The market would tank the UVXY, which is the same as the VIX. It tracks future volatility, UVXY does, would spike up, and we would always buy UVXY puts on the spike. It was a simple equation, simple idea why the UVXY is designed to go down over time. So the fact that UVXY spiked up, let's just get a look at this. UVXY spiked up to what? Let's go not a month back. We'll go 5 days. So it went almost to $19.84 yesterday. And again, here's the 5-day chart. So you can see at the high yesterday with IVs and the S&P being down, we know the market's going to settle. It wasn't just going to rip lower. With that said, the UVXY, the volatility index, should continue to drop. So somebody on our Discord asked me yesterday, what's going to happen to the UVXY today? Again, we used to load up puts. We sometimes went out till Friday, giving ourselves 2 or 3 days, or we went out to the next week. Now, I looked at these UVXY puts yesterday. I looked at the $19 puts, and I saw that they were $45 or $46 when the UVXY was spiking. However, when the UVXY dropped, do you know where they ended up? They ended up close to $1 per option, $100 per option. If you're in at 45, that's talking about 100% return just by playing that volatility wasn't going to happen yesterday. So again, what the person asked me is, and the UVXY closed at, let's just see where we are, $18.38. So I explained to the individual, and let me just get it up there so everybody can see what the question was. Oh, gold is spiking, 1941. Look at that. It was $19 and like $1,927. So it's up $14 since I came on and started the live stream, which means my position is probably rocking. Again, I gave myself till next week. It would just be my luck that gold would rip higher today, and the options I sold yesterday, which expired today, which would obviously get a higher return. Okay, anyway, let's go into Discord. Here we go. And let's go into Trader Chat. All right, we have a chat room. We also have a public chat room for anybody that wants. So let's find yesterday's question and answer about the UVXY. I know it's got to be right. $20 contract. Oh, yeah, those are the ones I missed. Great. Shit, man. Can't find anything. Here we go. So the question was asked, hey, I know you have solid experience with the UVXY in this market. If the market has a green day, let's say 1%, what levels do you see the UVXY at? So I said that if the market's strong all day from start to finish, you can see $16.95. Let's remember the UVXY closed at $18.38, okay? $18.38, $16.95 would be like a 9% move. Okay, if the market is strong in the morning, you can see $17.40. Well, the UVXY pre-market is already off 3.81% lower at $17.68. So we're right in between, right around here. If there's chop, $17.72. So even if there was chop, I still saw it going down to $17.72. Where is it pre-market? $17.71. So again, if the market is red, he didn't ask, so I didn't want to share. Again, he wasn't assuming the market would be red. But this is how you make assumptions, make guesses. If you got on puts, that $19 put, let's just say the market's green all day and the UVXY falls under 17, you're talking about $2 and change. The fact that this put was selling for $45, $46, and you could potentially get $200, you're talking about a 3x move, a 300% move, basically overnight in the UVXY ETF. So good for that individual, good for Chris. He's probably going to crush it. We used to play puts all the time. What do I like to do when I start off the day, since you guys are here with me? I like to go to the flow and algos room just to see what everybody else is looking at. NEO, okay? NEO still has strong support. If you look at the NEO net flow for 5 days, where do you see? Puts are still down here. The calls calmed down a little because the market was a little rough. But what's likely to happen is NEO's likely to hit that $17 number that we spoke about. You can check out the heat flow map so you can see where most of the money is as far as how it's spread out. Flow sum. So although you see flow sum and you might see 480,000 open interest on the calls and only 58,000 on the puts, you've got to notice also that half of these are buys and half of them are sells, okay? If they were all buys and they're all open interest and calls, you know that shit's going to skyrocket. So these are just some things that you look at. I'll see if I can find you another flow sum. You can check out the algo flow, see where NVIDIA, it doesn't show very much. Now, here's interesting. If you look at the algo flow for Netflix, the algos are telling you the stock price should be in the $442 range. The stock price is actually $431 right now. So there's a big divergence. Now, what happens when you see divergence? Well, the last time the algos were telling you 440 and the price was 430. Where did it come up? It came up and met in the middle at 436. So the fact that you're seeing the same thing. Now, when the price was up here and the algos were telling you 430, what happened? They met in the middle at 438. So the algos will show you the way. So yeah, you want to trade? Okay, I'll give you a trade. How about the Netflix calls? I don't know. You can go out of the money. You can go 450 calls. Why? Because they're cheap. So let's just go to Netflix and find out how damn cheap they are. Netflix, right? We'll go out a week, right? We're at 432 pre-market, so it's not crushing it. Going out to the 11th. Now, I know I can't afford any normal calls. The 430 calls are $1,000 or $10. So I might look at the $450 calls, which are $2.40, okay? Now, Netflix pops up to $442 at some point today, Monday, or Tuesday, okay? Let's just say it happens in the next 3 days. Your $450 calls, which are still extremely out of the money, will be worth somewhere in the range of $5 to $6. So you're still going to look for an 80% profit, although you're out of the money because you're correct about the stock. All right, so this is pretty interesting. Netflix is moving up to one of my lists, top of my watch list. Let's look at Netflix. Buys versus calls. So the buys are definitely outnumbering the calls over probably like 55%. And then you see 2-to-1 ratio calls versus puts. So again, Netflix is looking pretty tasty to get in today. Here we go, looking at the 3-7, okay, which is perfect. You can see the puts spiked here right around earnings and then have since come down, still coming down. I'd like to see the calls pop above the puts for me to get really interested. And again, you're seeing that here, 515, price is down, calls are still above puts. I would like to see the puts either drop to 0 or the calls spike up to 2. Carvana kind of lost interest, is following along with the algorithms. Okay, interesting again. PayPal, okay? So we're looking at PayPal reported earnings. I think they dropped 11% yesterday, okay? So the stock drops 11%. The cost for puts start falling, and they fell yesterday probably a couple hours to close down here. The cost for the premiums for calls still pretty high, telling me PayPal's probably going to have a bounce as well. So if I want to factor in things, and then we see about earnings. Stock comes out with earnings, it drops. What do? They buy the dip. Earnings come out on the stock, it spikes up. Remember Meta was at 335, 340. Then Meta dropped 312, okay? So again, it spikes off earnings, then drops off earnings, and then rebounds. Let's see what everybody else is looking at. Again, here are the PayPal options open. Okay, we got 370,000 calls, 228 on the puts. The buy sells is kind of break even, maybe a little more buying. Okay, so you're going to assume that they're doing the calls. Out of the money, definitely. Why? Because in the money are more expensive. So PayPal, Netflix, both positive. And then looked at the recent algo flows divergences, meaning divergence is something like I showed you right here. The algos say it should be up high, the stock price is down low, or vice versa. It could be a bearish or a negative divergence if the algos were down here and the stock price was up here, because you're going to come down and meet someplace in the middle. So right now we're looking at the divergence. SPY, bullish, yes. DocUN, Plug. Remember, I'm a fan of Plug. That's about it. I don't want to do Planet Fitness. I don't like Etsy. I don't like Energy. And I would stay away from Oracle as well. Dark pull on the SPY, very small. Dark pull on Apple. Yep, they continue to sell Apple. Where were they selling it? Block trades, 186.40s. That's very interesting. All right. And then I'll look at the market net flow, which will just tell me how the market ended. Net flow, market. And we'll go out like 3 days just to see where we're at. Going back Wednesday, Thursday, Friday. Of course, we had the big outflow on Thursday. So I just want to see how the market reacted to it Friday, whether it looked like that continuation. So here we go. Market dropped yesterday. As the market is dropping, hit the lowest point right here, 447 and change. Cost for puts still pretty high. Cost for calls sold out at the end of the day, which makes me think that any spike this morning, which we're definitely seeing a spike in the market, would make me more weary and more cautious. So I want to be cautious with any other positions. Amazon, I plan on selling at open, taking profit. I don't want to ride it because, again, if they decide to sell off Amazon, there could be a quick drop of like 3 points. It could go from 141 to 138, which is still crushing it, after earnings. However, if my options expire today, that 3-point move is talking about $300. If I have two contracts, you're talking about a $600 movement to the downside. If I had the potential 600 movement upside, and I thought Amazon could run to 145, 146 today, I'd be holding. But again, I didn't even want to hold those two options through earnings. All right, with that said, let's get right into the SPY, okay? And let's talk about where the SPY was yesterday. So let me just pull that up, my chart here. Boom, boom. No, that's me, Amazon, right? Bookings, Apple, those are the earnings. Okay, Apple, right? Okay, SPY from yesterday. Here we go. 450.80 on the top, 447.37 on the bottom. Range from the top to the bottom of 3.5 points, okay? So I say to myself, okay, 3.5 points. We saw a 5-point move the day before, under 3-point move the day before, under 3-point. So I'm going to say, okay, we're somewhere in the 3.5 point range. I like to say history repeats itself. So if I'm looking at this and understand yesterday's volume started out extremely, extremely strong. Volume in the market was strong. It ended the day average, maybe a little above average, but basically average. Went from extremely strong to average. So with that said, again, I thought we were seeing some consolidation. The last time we saw consolidation, it lasted all of 4 hours. So the fact that yesterday's lasted one day, and again, we're ripping forward this morning, not a big shock. Let's remember, we had 46 straight trading days before we saw a 1% decline in the S&P 500. That 1% decline happened after the downgrade. So it took a downgrade to do that. Let me see. Okay, so SPY yesterday, I mentioned the 3 points I was following was 452. If we broke 450, I thought we were going to 452. All right, under 450, we're going to touch and find support at 448. Where did we find support? Just under 448. Again, yesterday's low was 447.37, and that happened late in the day. So 448 was holding up well. From 448, we went up to 450. From 450 up to, I thought we were going to 451. We rejected yesterday's high until we hit that high was 450.54. So points that I'm following today, right? 400, let's just see where the SPY is right now. Oh, thank goodness. Gold is popping. 1942. I would be looking for 19. Dow just dropped. No, that's yesterday close. All right, let me get over to the SPY. Qs, Ford, Meta, Google, SPY. Okay, let's see where we are pre-market. 450.83. So understand yesterday's high at $450.79. We're right there. We're 450.78 right now. So we're at yesterday's high. Remember, we're gapping off of futures. All right. So these are very key numbers. What's likely to happen is we're likely to be selling it open right back to 449 and change. And then if it's one of those days that we get bought up, which we've seen almost like every other day, then it's likely we get bought up and go to 452 right away. Now at 452, again, the next step up, 454. So if I had to give my scenarios of what I thought was going to happen today, yeah, right there. Okay, so we closed at 448.84, which is basically 449. We're 2 points higher, which is 0.5%. We're going to sell off at open. All right, instead of being bought off the gap down, we're going to sell off a little. Now it doesn't have to be that intense. It really depends on the volume. If I see 6 million on the SPY within the first 8 or 10 minutes, I know that's extremely strong. What's likely to happen is you're likely to dip, same way we started yesterday, dip and then rip higher. So if you're looking for any calls, again, I would suggest everybody buy out the extra week. If you're playing these lotteries, which expire today, and you're wrong, you buy the dip and it continues to dip, you're going to blow up your account. You're going to lose 90% on that trade. So again, dip and rip for next week. What options am I looking at? I already mentioned. I'm looking at, well, I already rotated my gold position into next week, and I'm looking at Netflix off of what I showed you with the flows and algorithms. And then I'm also looking at PayPal. PayPal, which just reported again with PayPal, I might wait a couple days. Why? Because there's the 3-day rule, meaning a stock tanks off of earnings. Then the first day they look to buy it back. Then the second and third day they sell it off a little, and you finally find the right baseline or bottom or entry. Remember, we saw that with Disney. We saw that when Disney made the announcement that they were replacing their chief financial officer. It went from like 100 to 109. I'm like, that's ridiculous. Give it a couple days. It'll come back. Where did Disney go back to? It went down to sub 90. See what we got here. So I think I'm joining those Netflix calls, blah, blah, blah. Grabbed an Amazon 140 call for 811. Oh, so that's an interesting position because yours didn't expire today. Mine expired today because I was going to sell into the run-up into earnings. I didn't want to hold through earnings. I thought I would get 100% before earnings. Interesting. I got tied into it. My options expired today, so I know I have to be forced to sell today. You, on the other hand, interesting. So here's what I would probably do. I'd probably keep looking at the Qs today on my watch list. Qs, Apple, Tesla, and then, of course, Amazon. Why? Because I'm following the Qs. Obviously, they're going to tell you what Amazon's going to do. Apple, because if Apple's down 2% and it does drop down to 4.6%, which is the anticipated move off of bad earnings, downwards, good earnings, it would have been the same 4.6 upwards. If Apple drops close to 4% and we see another 1.5%, Apple basically controls the NASDAQ, Apple and Microsoft. Okay. So if Apple drops, that can definitely hurt your Amazon. It can take your Amazon down from 141 again to like a 138. Not that it's terrible. And again, if tech pops next week, that 138 could be 142 Monday morning. So what would I likely do? If you have, let's say you have 2 calls, like I had 2 contracts, let's just say they expired next week. I would sell 1 today and I would hold on to 1. And then if it went down and I still like my position, I might buy that 1 contract back, $600 cheaper, something to that extent. If you only have 1 contract, it depends how big your account is and how ready you are to, risk some of your money because small accounts must secure profit. With that said, I've got to shoot a Discord video, take my girls to camp. It's my morning. I'll see you guys later. Monday morning, join me at 8:30 a.m. If you like what I do, please